Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of Waters Corporation, ticker symbol WAT. At the time of recording this video, Waters Corporation is trading for $365.55 per share. Year to date, their stock price is down 2%. Over the past year, their stock price is down about 5.5%. Going back 3 years, however, their stock price has compounded at a rate of 17.5% compounded annually. Over 5 years, that's 15% compounded annually. Over 10 years, this is about 16% compounded annually. And going back prior to the global financial crisis, Waters Corporation has compounded at more than 12% annually. So currently, Waters Corporation is trading pretty snugly between their 52-week high and low. The business has about 2% of their shares outstanding sold short, and they are nearly a $22 billion market cap. So Waters Corporation operates in the life sciences industry. Waters sells liquid chromatography, mass spectrometry, and thermal analysis tools. These analytical instruments provide essential information on various products, such as their molecular structures and physical properties, to help clients enhance the health and well-being of end users. As a percentage of sales in 2020, Waters generated 59% from pharmaceutical customers, 30% from industrial clients, and 11% from academic/government institutions. Its products are used by customers working in research and development, quality assurance, and other laboratory applications. Waters Corporation was founded in 1958 and is headquartered in Milford, Massachusetts. So for today's fundamental stock analysis, we're going to be performing a modified version of the 8-pillar analysis popularized by Everything Money, taking a look at 8 key financial metrics to come to a holistic and beginning understanding of Waters Corporation based on their fundamentals. So let's get right into it. So starting off here with pillar number 1, we want their average PE over the past 5 years to be below 22.5. So currently they're trading at 32 times earnings or a 32 PE. Looking at their historical PE valuations on this chart here, we can see that this is significantly skewed from very low earnings in 2018. So if we were to adjust and look at their stock price more overall outside of that atypical year, Waters Corporation has traded for about 30 times earnings over this time frame. They've gone down to a low of about 18 times earnings. And since that atypical 2018, they've gone all the way up to 40 times earnings as well. Again, their average is at about 30 times PE. Although that's an adjustment from 5 years, this is still going to be an X here on pillar number 1. Pillar number 2, we want their average 5-year return on capital to be above 9%. Over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns, and these underlying business returns are going to be captured here by return on capital. Waters has increased their return on capital pretty dramatically over this time frame. They've always averaged above average returns on capitals, but they've bumped it up from 16% in 2017 up to around the 40% mark over the past 3 years. So averaged out in this time frame, Waters is producing about 34% returns on capital. That's about 4 times more than the 9% metric we're looking for. So Waters is earning significantly higher returns on capital than the average company in corporate America. So this is a huge check here on pillar number 2. They earn very high returns on capital. Pillar number 3, we're looking for 5-year revenue growth. Waters has grown revenues not as dramatically as their increases on return on capital, but steadily nonetheless, from $2.3 billion in 2017 up to about $2.8 billion in 2021. That's our second check here on pillar number 3. Pillar number 4, we're looking for 5-year net income growth. Again, they had this atypical 2017 that carried into 2018. So they only had $20 million of net income in 2017. Last year, they had about $700 million of net income. So this is a check here on pillar number 4 as well. Pillar number 5, we're looking for decreasing shares outstanding. When you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. When a business buys back shares and decreases the amount of stock that they have outstanding, they're increasing your ownership percentage in that business, ultimately increasing the percentage of the business's profits that you're going to be entitled to without you having to spend a dime. So we love it when businesses are reasonably valued and are buying back their shares. Here, that's just the case. Waters has decreased their shares outstanding from 80 million in 2017 down to $62 million in 2021. That's a big check here, and over this time frame, they bought back about 22.5% of their shares outstanding. So as a long-term investor in this company, if you've been invested in this company over the past 5 years, you now own more than a fifth more of the business than you would have 5 years ago, and you haven't had to buy any more shares, you haven't had to put out any money at all, and you're getting this increased ownership percentage in the business. So this is an absolute win for long-term investors, and this is a great sign to see here, especially on a business that's earning such high returns on capital. This is another big check on pillar number 5. So far through 5 pillars, we've got 4 out of 5 checks. Pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures. It's this column here in green. Free cash flow is the lifeblood of any business and can be used to pay dividends, pay down debt, make acquisitions, or reinvest back into the business. A business's abilities to produce free cash flows now and until Judgment Day, discounted back by some reasonable interest rate, is ultimately what that business is going to be worth. So looking at their free cash flow profile here, we can see that even in that atypical 2017, Water still produced a lot of free cash flows. So that's good to know that that charge against them was really just an earnings charge and not some dramatic drop off in their overall business. Another thing we can take away from their free cash flow profile is that relative to their cash from operations and free cash flows, Waters has relatively light capital expenditures. So this, coupled with the fact that they're earning very high returns on capital, are signaling that they're in this tier of being a truly great business. So in 2017, Waters produced $612 million of free cash flow, and over this time frame that actually decreased. In 2021, they only produced $586 million of free cash flow. So relatively speaking, their free cash flows have been pretty stable, plus or minus about $100 million over this time frame. So although this is an X on pillar number 6, in an average year, Waters is producing $560 million of free cash flow. So we'll be using that number on pillar 7 and 8 coming up here. So pillar number 7, we want their net debt, which is long and short-term liabilities minus cash and short-term cash equivalents, to be below their average 5-year free cash flow multiplied by 5. So as of the end of last year, Waters had $1 billion of net debt. When we multiply their average 5-year free cash flow of $560 million times 5, that brings us to $2.8 billion. So this is a big check here. What we're trying to take away from this pillar is how the business is utilizing leverage. And based on their abilities to produce free cash flows, Waters is using relatively modest amounts of leverage. Their business is not overly levered. And if they keep having average years into the future, and if they keep producing average years with their abilities to produce free cash flows into the future over the next 5 years, they'll have plenty of cash on hand to pay off all this debt. So that's a sign of a conservatively financed business. We love to see this, and this is a check here on pillar number 7. Finally, the big pillar of them all, pillar number 8, we want their market cap to be below their average 5-year free cash flow multiplied by 20 to give us a reasonable starting point as to a valuation for the business. So currently, Waters has a market cap of about $22 billion. When we multiply their average 5-year free cash flow of $560 million times 20, that only brings us to $11.2 billion. So we're off by nearly $11 billion here. So this is going to be an X on pillar number 8. Based on their abilities to produce free cash flows, if we're assuming that a 5% average free cash flow yield is a reasonable valuation for this business, then Waters is looking expensive at the moment. Again, we're basing this valuation off that 20 times average free cash flow. Given the fact that Waters is able to earn high returns on capital and they have a relatively light CapEx business, Waters may justify a higher overall free cash flow multiple. So that's something to take into consideration here. So in summary, Waters checks the box on 5 out of 8 pillars. They're off on our valuation metrics, and their free cash flows have pretty much been flat but slightly declined over this time frame. Waters is earning significantly above average returns on capital. They've increased their revenues and net incomes, and they've also bought back over a fifth of their shares outstanding, and the business is very conservatively financed relative to their abilities to produce free cash flows. Then as a note, Waters is currently not paying out a dividend, And just because they're off on our valuation metrics doesn't mean that you're automatically going to pass on Waters Corporation. This type of analysis is a holistic and beginning understanding of Waters based on their fundamentals. It's not financial advice. If you're considering investing in the business, you really want to understand the business inside and out and truly understand the essence of the business as if you owned 100% of it. The way to do that is to learn more about the business by reading through their filings, dive into their 10K, and come to a deeper understanding of Waters as a business overall. So again, this is not financial advice, and this is not a buy or sell recommendation of Waters Corporation. This is a holistic starting point to determine whether it's worth your while to do that further due diligence and learn more about the business. So with that said, that's it for today's fundamental stock analysis of Waters Corporation, ticker symbol WAT. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Waters with me, and have a great day.